Good morning, everybody. Welcome to another daily market report brought to you by Mike Bjork. Today is Monday, and it's September 11th, 9/11 here. 16 years ago today, we had that fateful day, and of course, remembering those lives that were lost and those who were affected by those lives. And wow, it's been kind of a long, even though it's been long, it doesn't seem that long ago for many of us here. Today, it's kind of a light day today. Whoops, sorry about that. Today's kind of a light day. Economic calendar, nothing scheduled for today. This week is going to be kind of light. We got retail sales coming up on Friday, which will be kind of a big report, and then CPI coming in on Thursday. So those will be kind of more of the main items this week. But those are kind of, again, those are what's for this week. Otherwise, it's kind of light. Stock market's up. Actually, the Dow is up over 200 today, and a lot of it is due to what kind of led up to the weekend. That kind of led to the point where they were dropping Irma and North Korea. We'll touch on Irma. Irma came in. It was a Category 5 coming in. It was one of the strongest on record coming in from the Atlantic. Thankfully, it dropped. It slowed up a little bit to a Category 4 instead of Category 5. Even though it was still a devastating hurricane, but people are thinking it could have been much worse. So again, our thoughts and prayers are still with those people who are down there that had to go through it. It's kind of dropped down to a tropical storm, which again, more people will be affected by the path of this tropical storm. And but again, we're thankful that it eased up a little bit. It's not worse than what it's not as bad as we thought it would be. But again, our thoughts and prayers are with those people who are in those affected areas of Irma. North Korea, it eased up a little bit. There was no missile launch as they had thought they might on Founders Day. They thought that they were going to test the ICBM on Founders Day, which was Saturday, and nothing happened. No missiles were launched. So they're relieved about that. But they're on edge because the UN is talking about more sanctions, and of course there might be more retaliation from North Korea over such restrictions, and they vowed, more retaliation against the U.S. specifically. So, of course, they'll be kind of a little bit watching that situation, how that's going to be handled, and how that will be done through the political channels here. So that's pretty much what's kind of affecting the market today. So here's the bond market. As you can see, we had that seesaw. We touched it. We touched that second floor of or second ceiling resistance. We pulled back. We were kind of, as if you saw last week, we did mention a bear engulfing here. It looked like it could potentially change, at least temporarily, a pattern change here. So as you can see, we had this nice long term here, but we did drop a bit. As you can see, a pretty big drop here. We're down about 17 basis points from where we left off on Friday. So obviously that's enough for a worsen in interest rates from the pricing we got on Friday here. So let's take a view here at the Treasury, and the Treasury, same thing. We had this view going downwards trend here on the yields, and then we had this big spike. We actually almost touched the floor of support where we would have been, which was down about 1.98. That would have been our floor of support. That would have been a bounce back, but we came down as low as like 2.01. Right now we're up to about 2.11, so a pretty big jump here in Treasuries. We're up about 6-7 points here. Currently right now on the yield treasuries here. Alright, so that pretty much concludes it for today. Again, today's kind of a light day, and if you guys want to get more updates throughout the day today, just come over to Twitter. You can find me. My handle is Mike Bjork on Twitter, and get more updates. Hope you guys have a wonderful day. Thanks so much for watching, and again, we'll look forward to seeing you guys tomorrow. Bye-bye.